Guys, inflation is still around. The Federal Reserve and Jerome Powell just announced that they are going to increase interest rates by 50 basis points, as was predicted. And you are seeing we are having price reactions to the downside. We were positive throughout much of the day. We did have a bigger fall. The NASDAQ was down 1.6% at one point. But right now, it's looking like the pace of rate increases is slowing. But that's not what he said in his speech, and he is actually still talking as we speak, but I've gotten to the question and answer part, and I no longer need to listen to him. So going through their economic projections, I really like to see what they put out here as far as where they see GDP going, where they see unemployment going, where they see PCE inflation going, etc. So let's scroll down here to some of their graphs. So looking at the long term, you know what? Let's go to interest rates first. First thing we're going to look at is what they call the dot plot. And this is the different Fed presidents that have a say in what's going on, and that changes every year. But it goes 2023, 24, 25, and then into the longer run. And each one of these dots is where one of the Fed presidents sees interest rates going in that time frame. And you can see right now, they all kind of agreed that we're going to sit right in this little, just under 4.5%, and that's where we're going to close the year out. The next meeting begins on January 31st. They're going to decide on February 1st, that's a Wednesday at the same time, 2 o'clock Eastern time, what they're going to do with interest rates. And you can see a lot of them are seeing another 50 to 75 basis point increase. Some of them are even going 1 full basis point. You have 5 Fed presidents that are saying we need 1 full basis point. Now, Powell has said we are going to rely on the data going forward. He also said we are not at a sufficiently restrictive policy yet, meaning that you are absolutely going to see more interest rate climb. And that is why you are seeing these numbers fall. People wanted one thing, and what did they want? They wanted the infamous Powell pivot. They said, "Oh, good, we're going to slow interest rate hikes 50 basis points." What does that mean for January? What is that? January, February? It's right at the end of the month. They're going to say, "Oh, and then they're going to cut it to 25 basis points or 0, and then we're going to get a reversal, and then we're going to not be raising interest rates anymore," meaning that inflation is coming down. That's not the case. They do see inflation still continuing to rear its ugly head. So where do they see? We'll go with PCE inflation. So in 2022, the median range is somewhere at the end of this year, probably sitting in this 7.1, somewhere range in here. It could even fall below 7%. Into next year, 2023, people see it coming in this 3.5 range. This is the median. And they get to their 2% target in the long run after 2025. There's a lot of arguments being made out there, one specifically by Bill Ackman. He's a hedge fund manager of Pershing Capital. And I actually agree with a lot what he says. He says, we're not going to get back to 2% inflation. That's just not where things are. That's not where prices are going to allow different things to be. And he thinks that inflation is going to settle somewhere above this 2%, probably in the 3% range, which is perfectly fine. But the 2% range is a little bit ridiculous, in my opinion, going forward. Now, where's the unemployment rate going to go? Unemployment is, they're looking at it, the Fed, here's my unemployment right here. 5, this is where your unemployment number is going to go. So right now we're sitting a little under 4%. Next year it's going to move towards 5 and then start creeping down in 2024. And in the longer run, kind of return to that healthy 3.5 range. Then the GDP will slowly climb. And guys, remember, as the more our economy grows, it's just like a company. The more the economy grows, the harder it is going to be to grow the economy. Inflation is going to absolutely help that. And that's what we're seeing going forward. So the biggest thing that I take away from these meetings is what they say and kind of the tone that they're putting into things and this dot plot. I'd like to see where things are going. So into 2024, rates are coming down about 4.25%, and then they'll start to trickle back down. And in the longer run, 2025, 2026, we're going to sit around this 2.5% range, which is, I think, where they should be. A zero interest rate environment is not good for anybody over the long term. Look what's happened in Japan, and then look immediately what's happened in the United States. It leaves absolutely no room for error. It leaves no room for policy moves, and you're in the situation that we're in. So the biggest takeaway, take note of what Powell said. We are not at a sufficiently restrictive policy yet. They are going to continue to tighten. They are going to continue on with inflation. If they did not, what you would have, I'm just going to draw it right here. What you would have is inflation was up here. Inflation was starting to come down. And then interest rates. Interest rates were climbing. And then let's say that they started lowering interest rates like this. All of a sudden, you start lowering interest rates, these inflation rates would climb right back up. And this is what you saw in the 80s. Then they would have to spike it right back up. And normally, in this time frame right here, you're in a recession. What does this cause? The second bubble? This is what you call a double dip. Double dip recession. Double dip recession. And that is what Powell needs to avoid. That is what the Fed needs to avoid. They cannot go light on rates with just because inflation is coming down in the near term, because what that'll cause is inflation to spike right back up. You'll be in a double dip recession. Things will not turn out well. So my biggest takeaway from here, what do you do as a person? You just keep investing in your ETFs. If you're not investing in ETFs and you're investing some of your money in stocks, 10, 20%, just continue to sit, be patient. When you see opportunities, go for them. But if you don't, just sit there and be patient. Things are going to settle down. I promise you, in probably 2 to 3 years from now, when you get to 2025, 2026, you're going to be saying, man, remember when it was so crazy back then? Remember when inflation was going off the charts? Remember when we sat there and waited with bating breath on every single word, hanging on every single word that Jerome Powell said? You're going to look back and laugh at that. So if you guys like this, if you guys like instant reaction videos like this, subscribe to the channel, watch more videos, and I promise you, you will be better off for it. Have a great day.
There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?